The TSX went where it's never gone before a couple of times this week. Another intraday record on Bay Street today and a winning week. In fact, the TSX was the best performer in North America, and it's up by about 18% year to date. Now, a boost of close to 8% in the price for oil definitely helped this week. Gold was also higher over the past 5 days. As far as the U.S. goes, renewed uncertainty today around U.S.-China trade, with a visit to a farm by Chinese officials abruptly canceled. Today was also a quadruple witching day. That's when options and futures on indices and stocks expire. And just to illustrate that, in the first 15 minutes of trade on the S&P 500, volume was triple the average. Shares in Apple really didn't move much today, with iPhones, the latest iPhones, hitting store shelves. A JP Morgan analyst says there has been healthy pre-orders, but at the same time, there were no crowds or lineups in China for this newest device. The company also briefly reclaimed a $1 trillion valuation, joining Microsoft in that exclusive club. But then shares in Apple took a leg lower on the negative trade news. Apple, of course, is one of the most trade-sensitive stocks. Shares in Netflix in the red for a third straight day today. And we are seeing this pullback after analysts at Evercore said softer recent data checks paints an uncertain picture of the service's international subscriber trackings ahead of the third quarter. So in other words, it appears activity is slowing. Now, at the same time, the CEO also acknowledged today it will be a whole new world of streaming competition once Disney Plus and Apple TV launch in the coming weeks. And for the first time in about a decade, Canadians are putting more of their savings towards debt rather than investments. This contributed to a decline last year in the value of investments. Now, these findings are included in the 2019 Household Balance Sheet by Investor Economics. As you can imagine, there were a number of factors involved in this switch that they saw. U.S.-China trade, along with rising interest rates last year, the ongoing Brexit drama, and a brutal end to 2018 for markets. Now, going forward, this could mean more caution from Canadian investors, especially since some of those issues mentioned are still not resolved. I'm Kris McCusker in the 680 Business Center.